If you're new here, welcome to the Coffee and Crypto team. When everything feels bearish, usually rallies come after. When everything feels bullish, usually crashes follow shortly after.
Amen.
The levels I'm watching are, first of all, that 17,600.
If you're listening to the sound of my voice, that can mean only one thing, and that's that you are in the market pulse, baby. Let's do it. The merge has shipped.
Come on, baby.
Yeah.
Come on now.
That is the date that the Federal Reserve will be making their Fed rate decision.
Well, gee, Tim, I would love to do that. I think we're still going to see projects like Bored Ape Yacht Clubs or things like that still exist. The answer is 1,000 Dogecoin.
Oh.
Good morning, everybody. I had no idea when I was supposed to actually start speaking, so that was I think I timed it right.
I don't have a countdown anymore.
No countdown from Smay this morning. But how about that new intro made by Definitely Not High Zach? That was absolutely phenomenal. I'm excited about what this show is looking like going forward. But let me start off by welcoming every single last one of you guys to this Wednesday episode, September 28th of Coffee and Crypto Live. It is about to be a fantastic show. A lot of things happening right now in crypto. Yesterday, we began to rally as we predicted, breaking out of a symmetrical triangle pattern on Bitcoin. However, we started to keel over and fall back down to the downside, and we actually last night hit our heads back around 18,000, I believe 500, maybe even a little bit lower. What is about to happen in Bitcoin next? Are we going to be rallying back up to that descending level of resistance around 21,000 and that golden pocket? Or is Bitcoin crashing? Wow, my voice. Is Bitcoin crashing here?
He turned French.
That coffee got me. It got in my throat again. Sometimes Tim versus coffee.
Well, isn't that where it's supposed to go?
Crypto.
It's supposed to go on your throat.
I think it got into my airways is what happened there, because I had like a little bubble in my throat. Anyway, that ruined a perfectly good little monologue I was carrying on there about the price of Bitcoin. It is coming down. The question is, why is it coming back down? Is the relief rally over? There's a couple things we could potentially tie to it. First of all, the Nord Streams, did it backwards, dyslexic. Nord Stream pipeline had a leak. The question, though, is that there's actually an investigation going on that sabotage could have happened. We're going to keep you guys updated on what is happening there. Also, Jerome Powell, who is head of monetary policy, weighs in on crypto, specifically discussing CBDCs and regulation. We're going to be talking about that and a lot more with Caleb Franzen today. It is Caleb Franzen Wednesday, so if there's no other reason to smash that like button, that is one of them. You guys know Caleb is an absolute GOAT. We love him here on the channel. I'm excited to hear what he has to say, but I am also joined by two fantastic co-hosts here with me today. I got T-Shroom over here in his hedge jacket this morning.
Hedging it up, baby.
Boom. I also got Smay over here to my left running tech today. How you doing, old Smay?
Konnichiwa.
Ooh, new language.
Yep.
Is that German?
How many, let's go the over-under on this one. How many outros are we rolling today? In the middle of the show?
Over under. Let's.
I'm gonna say 2.
Oh,
I'm
Tim.
taking the over or the under.
Oh, Tim, you really know how to grind my gears. I'll tell you what. Now, I will say, guys, I actually fixed the whole outro problem, so you won't be seeing really much of any.
I'll take the under.
Other than the actual outro.
You said you fixed the hotkey.
I did. So Tim, you should stop bullying me live on show. Okay, we'll talk about this after.
Okay. A couple of announcements before we keep going, just so you guys are up to date. We live in Florida, and in case you guys have been paying attention to the news, Hurricane Ian is coming through here. I think it is making landfall later this afternoon / tonight. It shouldn't really affect us till the middle of tonight, but we're going to go ahead and just be a little bit conservative here. We are not going to be having a show tomorrow morning, so anyone who is looking to tune in for Coffee and Crypto Thursday, that is tomorrow, the 29th, we will go ahead and hold off. If we still have power, there's a chance in the afternoon the three of us will do a Zoom call from our homes and let you guys know how we're doing and what our takes on the markets are. Other announcements we have is that Friday, okay, so obviously we're not doing a show tomorrow. Friday will depend on what the power situation is looking like. The storm should be gone and we should be done with it. So if we still have power, we'll be back in studio on Friday. If we don't, of course, we have to miss. The two more updates here, announcements. Before we get into our green names that I'm not forgetting today, We just posted a video for all of our YouTube members, speaking of those green names. I made a video updating you guys on what my plan is in case we do have a Bitcoin crash. How am I preparing myself with any dry powder I have left in crypto, and what are the spaces on Bitcoin and the levels you should be looking at. You shouldn't copy it verbatim, but hopefully it gets your creative juices flowing so that you can decide for yourself how to plan accordingly, whether the bottom is already in or whether we have further to go to the downside. You need to be prepared, and that's what that video is all about. Make sure to go check it out on the membership stream. And the last one, this again is, Hurricane Ian screwing up a lot of stuff here. But if Hurricane Ian does not throw everything off, Saturday, we have a brand new video style coming out. We actually went out to UF campus, went to a college campus, and got the opinions of a lot of college kids about Jerome Powell, about monetary policy, and what their thoughts are. You do not want to miss it. We got some good answers, we got some weird answers, and we got some not really sure what they were on that evening.
And answers.
It is going to be a great video. Make sure you stay tuned. Saturday morning, 10 a.m. Eastern Standard Time, it will be going out. With all of that said, it is time for our favorite part of the entire show, the reading of the green names. Smay, take it away.
Thank you, Tim.
Ooh, that was loud.
I would like to read green names. Here we have... We have Justin Eubanks, Mitch Shaw, Grand Roofing Incorporated, Tyler Main, Eric Brew Baker, Mitch Shaw, Grand Roofing Incorporated, Gia S, Daniel J, Brad Torgeidel, Crypto Ben Franklin, Crypto Mini Bike. Who else we got here? A Mellow Fellow, Crypto JMP, Freedom Advocate, and he advocates for freedom, and I do too. Jeremy Shorter, It's 420 Wood, You Are Awesome, and let's see here, Colin McDonald. And then we have some blue names here. We got Crypto Sec Guy. We got Matt C. We got Shannon Sharp. We got all of our beautiful blue names. And who else we got here? We got a couple more. That's it. Queen. Oh, Queen. Shout out to Queen. All right, now back to you, Tim.
Awesome. Here's another thing, just so anyone ever knows. If you ever fall behind, or if you're ever worried about how long the video is and you're trying to catch back up, YouTube has this beautiful thing where if you go to the settings and go to playback speed, you can make it to 2x. Now, I know, in the past on this show, Jebb, I think anyone who could have listened to Jebb in 2x has a superpower. We are not that way. So if anyone's ever wondering, hey, I need to catch up on the show, how do I get me some coffee and crypto, but catch back up quickly to catch it back live, go ahead and use that settings button, speed it up to 2x speed. You should still be able to understand everything we are saying. That was just to help you guys out right there. We're about to jump into our market pulse here with T. Shroom. Today's market pulse is brought to you by his jacket, Hedge, and you guys know we love Hedge here. Again, I feel like we have to keep saying the same thing. If people don't have it already, I don't know what is stopping them, because you should want to be being paid in crypto. You're here watching a crypto YouTube channel. You clearly love it. Hedge is the beauty company, the beautiful company bringing you exactly what you want, and that is the ability to be paid in crypto. Make sure to check out the link down below just to explore. You can ask some questions. I think, what is it, $10 of free Bitcoin if you sign up and you pay in your first $40. You want free Bitcoin. You want to be paid in crypto. Save yourself some exchange fees. Go get Hedge today. Link down below. Now, T. Shroom, take it away.
If you're listening to the sound of my voice, it can mean only one thing, and that's that you are in the market pulse. Baby, let's do it. Smay, if you go to my screen, we're going to start off with the Fear and Greed Index.
That one definitely seemed more excited than usual.
Well, you never know what you're going to get in life. We are still in the extreme fear section of the Feed and Greer. The Fear and Greed Index, and
all right, Tim, that is inappropriate. You did not make fun of him for slipping up on his words. Come on, dude.
Yeah, we've not gone deeper into fear, which is good, but we're still cruising at a uncomfortably low, uncomfortably fearful place. So, not too much change there. Still in extreme fear. I am going to go ahead and touch on the CME future predicting tool for the Fed rate. I would say at this point it's extremely invalid, and this is not something you want to trade on yet, but I'll point out it's almost 50-50, almost neck and neck between 50 basis points and 75 basis points. What are these basis points you're talking about, T. Shroom? You may be wondering. Well, basis points are important because it's the rate at which the Fed increases interest rates. And interest rates are the same rates that you see on your credit card interest rate, on your housing interest rate, on the mortgage of that interest rate, and your car loan interest rate. All those interest rates trickle down from the interest rate on high, which is the federal funds rate. And that tells essentially tells banks what they can charge for the cost of money, and then those banks turn around and charge people and institutions that rate to borrow money from them. It's a little more complicated than that, but you can think about it like that. I've got a chart pulled up. This is a historical chart of the interest rate of the federal funds rate, and right now you can see in our time in 2022, the federal funds rate has just kind of skyrocketed here. Each one of these has been a big day, a big week for our channel because we've covered it and we've pondered what that rate could be, and then we get the rate and it's been higher and higher every decision. So, and we have gone higher now than our 2019 levels, and we're closing in slowly on our 2007 levels. So, always going to be watching that. Hopefully, if you're new to the channel and you're new to federal fund rates, then you got a little bit of a data download there so that you can understand what we're talking about a little bit more later in the show with Caleb Franzen, when we will assuredly be talking about inflation and the Fed rates. But the important takeaway here is it's neck and neck right now, 50-50. Again, we're not going to be getting that print for quite a while, and not until the end of October and the first couple days of November there on the 2nd of November. Shooting forward, we're going to look at some, not leaving macroeconomics quite yet. We're going to be looking at a tweet I tweeted out that has 0 likes. Dun, dun, dun. So, hint, hint, go like it. End of Q3 macro data schedule on Thursday. So, tomorrow, the 29th. We might not be live streaming, but what's important is to keep up with the U.S. GDP data will be dropping on Friday. The 30th, the EU core CPI will be dropping, and the U.S. core PCE will be dropping, very similar to the CPI, but a little different. And then the UK GDP will print as well. And then I said, a big week, all eyes on how the Dixie will react. Certainly true still. Going to get into our stories here in the Market Pulse. The CFTC served up Ooki DAO papers by posting them in an online discussion forum. So the CFTC getting tricky here, getting real interesting with how they're serving up their legal documents. The Commodity Future Trading Commission, CFTC, used unorthodox methods to serve a lawsuit against the pseudonymous members of Decentralized Autonomous Organization, DAO, for short, according to court documents filed on Tuesday. Members of the Ooki DAO, which operates a protocol that offers illegal off-exchange tokenized margin trading and lending services, were notified of the lawsuit when CFTC paralegal posted the complaint and other documents to an online discussion forum meant for DAO members to discuss governance issues. A CFTC attorney claimed in a court filing all of that. The documents were simultaneously submitted through a help chat box on the DAO's website as well. So, kind of clever business here from the CFTC. Obviously, it would suck to be in that DAO, but it looks like they were operating some illegal services there as well. Charges were also filed and settled against a blockchain protocol B0X, which the CFTC claimed operated the same services before handing over the reins to the Ooki DAO and 2 of its founders, who settled for a $250,000 monetary penalty, $250,000 monetary penalty there. So a hearing is currently scheduled for November 9th for the Ooki DAO to be brought to justice and for justice to be served. Again, I don't know a ton about these claims about whether or not these services are illegal, but these guys are being brought, before the courts, before the CFTC at least, to be brought to justice and see if what they were doing was illegal. And it's going to more than likely set precedent for that space. Moving along, the South Korean crypto project Clayton will offer gas fee rebates to gaming firms. So this is a really interesting and innovative way to kind of reduce the gas fees for games, and it could be potentially the future. I would say I'm not quite convinced yet, but let's read and find out. Gas fees refer to payments made by users to execute blockchain-based transactions or commands. Fees on networks like Ethereum have reached over $3,000 per transaction. That would be an outlier, by the way, not the average, but during times of network congestion, which may push potential users away from the network toward cheaper options. There's gas fees on every blockchain, by the way, not just Ethereum. Under the new gas fee rebate program, selected game companies will be eligible for a 100% offset of their gas fees incurred from January 2022 onwards for up to $100,000 worth of clay per month. The grant is derived from the Clay Growth Fund, a fund that invests in companies built on Clayton and has previously committed some $20 million towards blockchain research at Asian universities. So Clay kind of stepping in here and covering the gas fee costs for crypto games so that those games can thrive and experiment and grow. Ultimately, Clayton kind of making a name for themselves here in the crypto gaming world, and it'll be really interesting to see how that pays off. More interestingly, though, is this a sustainable model for gas fees to be removed from the crypto gaming space to make those offerings more appealing and more affordable to consumers and users and gamers? My hunch is probably not. The way that Clayton is fronting this cash is not sustainable. They're basically paying for people to play games, and there's not going to be a clear ROI on that unless you can make the user pay a lot of money that would offset those costs. I think what's happening here is that Clayton is providing funds so that these games can experiment, get good data back, and ultimately Clayton can make a determination of whether or not they want to invest in them and then make an ROI later on down the road with those game developers. Moving on to our next story, trading platform Crypto.com secures regulatory approval to operate in France. So big green light here for Crypto.com. The trading platform has registered with France's top markets regulator. I'm going to take a shot at this here. The Autorité des Marchés Financiers, according to the announcement side. Probably butchered the crap out of that, but the acronym AMF, it's their markets regulator, probably similar to the CFTC or SEC version of the United States regulator. The registration is mandatory for all companies looking to provide digital asset custody and trading services, including buying or selling digital assets in legal tender in the country of France. France is becoming a go-to location in the European Union for crypto companies. Earlier in September, Binance CEO CZ called Paris the financial hub for crypto in Europe. So a big label there, a big come up for Paris, France. In recent months, cryptocurrency exchanges Binance and Luno have also registered in France with their AMF, and Luno, parent company and digital currency group, is also the parent of CoinDesk. So full disclosure there from CoinDesk. Always love to see the honesty from our journalistic peers here in CoinDesk. So get Crypto.com getting into France before Binance. It looks like that's kind of a big headline. What do you think about that, Tim?
It's France. We talked about it yesterday. I don't know. It's a joke. Yeah, we'll see. I know. Binance has been. There's been times where I feel like people were really against Binance as a whole, even the retail investors, and then it seems like there's more recently Binance has been more of a ally to the retail investor. We'll see. There's a lot of things going to be coming out over the next couple of months/years when it comes to some regulation, some of this bit licensing stuff we're seeing here in the United States. How much of that is going other places? I've seen things like CZ and Binance coming out against that type of stuff. Mm-hmm. So is that potentially going to work its way out, and it's not going to be the exchange that a lot of governments actually want to allow in their country? So keep our eyes on what's happening there. I don't have too many opinions on that just yet because I need to know more details. Mm-hmm. But that's my brain is initially going is there potentially a blocking going on of Binance, as CZ seems to be more of an advocate for clear decentralization than other exchanges?
Absolutely. I think you're right on there, Tim, because CZ in this quote down here calling Paris, France, the financial hub for crypto in Europe. Who knows if he actually thinks that, but he's definitely trying to drop some soft whispers to the French regulators there so that Binance can get in those doors and start collecting fees from the French crypto traders. Well, we've got one more story here. FTX reportedly considers bailing out Celsius via asset bid. As you may remember yesterday, if you watched, FTX successfully won the bid for Voyager and up to the tune of $1.4 billion. So now they own all their assets, and that's pretty big. And now this article is saying they may be trying to do the same thing with Celsius. Crypto exchange FTX, led by crypto billionaire Sam Bankman-Fried, boy, he's in the news a lot, is reportedly considering bailing out Celsius Network by bidding on the bankrupt lender's assets. Coincidentally, the information came out the same day Alec Mashinsky resigned as the CEO of Celsius. This is, I believe, a quote from Mashinsky as well. For FTX, acquiring the assets of Celsius would imply the exchange's intent to save the lending firm, similar to what FTX US did for Voyager by securing the winning bid of approximately $1.4 billion. So, and I apologize, that is not the quote from Mashinsky, but it is just reporting, just getting the facts there. And this also comes at a time where Brett Harrison stepped down as FTX US president. So a lot of shuffling going on over at FTX. And if you were in the members stream yesterday, we did a lot of speculating, a lot of chatter around FTX and Sam Bankman-Fried and kind of what's going on over there at FTX. There's Brett Harrison's tweet. He said, over the next few months, I'll be transferring my responsibilities and moving into an advisory role of the company. So not stepping away from the FTX brand, but stepping away from the responsibilities and the roles of what it means to be president of FTX US. So definitely seeing some shakeups over there at FTX. Be interesting to see kind of what comes next from them, and if they get this this bid to buy Celsius's assets, that could be big. And if you're tied up in Celsius or Voyager, again, our hearts go out to you. You know, just stay positive. You know, this story looks like it's coming to, you know, not the best case scenario, but it's coming to a scenario where, hey, it's now in the hands of somebody who's got a bunch of money, so they're inclined to potentially return some of those funds back to you. And then our last story here, potential sabotage suspected after unexplained leaks found on a major Russian gas pipeline. Investigations are taking place into unexplained leaks affecting both the Nord Stream 1 and 2 gas pipelines, which bring gas from Russia to Europe via the Baltic Sea. The leaks will, and this is an interesting word here, I've never read it before, the leaks will scupper any remaining expectations that Europe could receive gas via Nord Stream 1 before winter, analysts noted. And scupper here is an interesting term. I will take the liberty to look this up for you all, and just a little vocabulary help. I didn't highlight the whole word. Yeah.
Let's highlight scupper.
It takes a village here. It did it again. I think it might be getting interference from the highlighter tool. And now we have wasted time, and it is ineffective.
I wonder if it's a typo.
Nautical, an opening in the side of a ship at the level of the deck or slanting from it to allow water to run off.
Right, which is why I wanted to highlight this, because it is a good rhetorical use of this word. It's a metaphor here, folks. See, the CNBC journalists over there are really taking the lead, and you're getting what you pay for.
Very literate.
Out of your CNBC journalists. Well, the folks, that's going to wrap up the market pulse. We're going to dive into oil and natural gas a little later on when Caleb Franzen joins us. But that is going to, and we'll expand more and speculate on this headline here. But that is going to wrap up your market pulse. I have been T Shroom. Definitely go follow me on the Twitters and like this tweet because it hasn't been getting much love recently.
The Twitter.
Thank you very much.
Yes. Thank you so much there, T-Shroom. We're about to jump in here with Caleb Franzen and talk a little more information. We probably will look at a couple of charts today, but there's a lot of discussions to be going on today. There's 3 topics I want to talk with him about. Hopefully we get to all 3 of them. First of all, Jerome Powell's takes on CBDCs and crypto regulation. Next, we're going to be looking at that Dixie and U.S. Treasury yields that are continuing to climb. Is there a leaf rally coming to crypto, or are those going to keep climbing? And we could be looking at new lows. And the last one, if we can get there, how will inflation be affected in Q4 if we see prices continue to increase in oil and housing markets? Let's go ahead and bring Caleb on here. How you doing today, Caleb?
Yo, what's up, guys? Good to see you. Those topics sound great. I'm ready to dive in, man.
Yeah, dude, I'm super excited. I knew when I was looking at, all right, tomorrow's Wednesday, I got Caleb coming on. I'm like, all right, we got some great stuff going on here. Before we jump into all that, though, we do have to get the second most important thing of the show out of the way, and that is the question of the day. So T-Shroom, take it away, and I can't wait to hear Caleb's answer.
Absolutely. Well, you don't need to go to my screen, but the question of the day is, would you rather hitchhike everywhere you go or have someone read everything to you? Meaning you have to have someone read everything to you. Let it sink in. I'm going to ask you again. Would you rather hitchhike everywhere you go or have someone read everything for you? And I'm going to throw this question to Caleb first. Caleb, what do you think?
Dude, this is a tough one, man. I mean, I'm not like the most like active person in terms of like going out and doing a bunch of stuff. So at first I was like, okay, if I might choose to, have to hitchhike everywhere I go because I'm really not going too many places. I hate to phrase it that way, but I might actually prefer to have someone read me everything, which would be a little bit of a problem considering how active I am on Twitter and online and just always digesting new information. But maybe if I had someone who read faster than me, that could actually be a win-win scenario.
I never thought of it as an advantage.
For me, this one's actually easy. This is probably one of the easiest ones we've ever done with questions of the day.
Wow. I disagree, but okay. Go ahead.
To me, it is. And the reason why, and first of all, my answer is I would rather someone have to read everything to me.
Okay.
I like controlling where I go. I don't want to have to always jump in a stranger's vehicle. But the reason why I would prefer it, first of all, I'm an extrovert. I love people. Second of all, while I do have to read to do what I do, I prefer audio. Like, so if I'm reading a book, the Bitcoin Standard, for example, I listen to it audio first. That one is so impactful and has so many details. I'm going back through it now, actually reading it visibly, but I don't like reading as much as I like listening. So if I had a buddy of mine or my wife or somebody with me all the time reading me things, I'm A-okay with that. That's someone hanging out with me, and I get to learn the way I like.
What about text? What about texting? What about reading chat?
Listen, I'm an open book, man. I don't.
What about doing analysis?
Yeah.
Again, I mean, you say read. I'm assuming we're talking about words. I'm assuming I can look at a chart and still.
Yeah, charts are different.
Yeah,
Okay,
I think we're talking about
whatever.
reading
I don't care.
Words.
I'm just trying to say that it's not as sunshine and rainbows as you made it sound.
It is for me. It is. So.
I don't want some guy standing behind you every time you're reading chat, and he's like, "All right, Tim. So they said, if I was a man, I'd."
Well, I don't have to. No one has to stand behind me. I can just listen to you guys talk about what's happening in chat, and then I can respond to it.
Okay. Well, anyways, now my answer. My answer is that I would rather hitchhike everywhere, because does a city bus count as hitchhiking?
No.
With strangers.
That's
you
not
have to do
hitchhiking.
Traditional hitchhiking. You can't use Uber.
Yeah, you thumbs up on the side of the
Thumbs up on
road,
the side.
waiting for somebody to come by and
Well,
get you.
I mean, still, I'd probably just walk everywhere, ride a bike, So, and so that
I think that's skirting the answer.
Yeah,
I
I
think you
think you
have
have
to
to
hitchhike to go
hitchhike.
anywhere. Like literally, even walking like down the street to the convenience store, you have to hitchhike.
No,
correct.
because hold on,
You don't get to walk.
That's not because how are you supposed to get to the road? Do I have to hitchhike from the door of my
Well,
apartment?
we're assuming you can get out to the road.
Okay,
Yeah.
so hold on. No, I'm gonna say that you can walk places. All right, that is the stipulation. And so with that being said, I would definitely choose the hitchhiking everywhere, because the fact of the matter is, it's like I like to read, right? I like to read. I read a lot. So that would really ruin my life if I couldn't read by myself.
Yeah.
So
And I would hate to hitchhike everywhere I go, but I think that's the one that I would do because
you don't have to go places. as often.
I just would not be able to have someone follow me around and read everything to me. Just having another person there all the time would suck, and not being able to just read would really suck. So kids, if you're listening, learn how to read early and you get an advantage. Stay in school, kids. It's the real message of that question of the day. Tim, take it away.
We're about to jump into our discussion. The first thing I did see in chat, and I forgot to say this when we transitioned from Markables. Happy birthday to Matt C. He turned 130 today, so give a massive applause to him. Matt C, we love us some
How
Matt
old?
C.
31?
131. 131. Yeah, he is looking great for his age.
That's awesome.
It's actually phenomenal.
131. Is he a hobbit?
So, yeah.
Bilbo Baggins.
Oh, goodness. We're about to jump in and have some discussion here. Really quickly, our discussion today with Caleb Franzen is brought to you guys by Anthony Price. Anthony Price is our CPA. He is a phenomenal, phenomenal advisor when you're looking at taxes. And again, if you're like me, who you are really, really concerned about what the IRS is going to crack down on this year when it comes to crypto taxes, I'm definitely using a CPA. I recommend you do as well to prepare yourself, and also not just to keep yourself from being problems with the IRS, also protect every single dollar you can of your crypto. To do so, you need a phenomenal CPA like Anthony Price. And the good news is, free 50-minute consultation. If he doesn't think he can save you money, then he doesn't take you on, and he'll tell you how you should do it yourself. You can't beat that. Go sign up with his link down below. Get that 50-minute call. Caleb, Let's jump into the thick of it. First thing, I think that Jerome Powell's actually speaking right now, although I don't know how much of what he's saying correlates to crypto, so that's not why we're not watching it necessarily live. My first thoughts to you, he's had some interesting remarks, and if you need me to clarify on what they are, I can do so, but he's had interesting remarks in the last couple of days about CBDCs and about the future of crypto regulation. And the reason I think this is a little interesting is not that he shouldn't have any opinion on whatsoever, but he is head of the Fed. He's the chairman of the Fed, a head of monetary policy. I think it is interesting when he's talking about what crypto regulation should look like, because it's literally an enemy to what he does as a whole. So any opinion he gives us on regulation, you got to kind of take with a grain of salt of like, hey, what's the motives going on here? But I don't know if you've heard what he's been talking about. What are your thoughts about his takes on CBDCs and crypto regulation?
So I heard, well, let me say it this way. I saw some headlines, but I didn't really dive too deep into it. I think the one thing that I did see that I do remember off the top of my head was something about how any kind of form of a Fed coin or CBDC, if you will, would not be anonymous, right? And so I did see that, and obviously that kind of sticks out to me. One of the big alluring aspects about whether it's Ethereum or, I mean, any kind of cryptocurrency, right? And especially for something like Bitcoin, is that it's really this permissionless, anonymous system. And so, right then and there, we already have a big reason for those who have really kind of bought into crypto as an ideological, I don't want to say ideological, but from like a theoretical standpoint, from a fundamental standpoint, we already have a big kind of confrontation there between what crypto provides and what a potential CBDC would provide. And I mean, it's no you could have seen this coming from a mile away. And so, I mean, I remember in the fall quarter of my senior year at college, so I think this was fall 2017, my professor for my monetary policy course, he was kind of a consultant for the Bank of England, for the Bank of Canada, and even for the Fed in various capacities. And he specialized in looking at digital currencies and implementation of CBDCs. And so this was a big kind of topic of conversation for us, even all the way back in 2017. So I think over the course of, the last 5 years, essentially, we've continued to roll in that direction. We continue to see escalation in terms of ideas and conversations from various Fed and central bank officials around this topic.
Yeah, I think something interesting, and you commented on right there, I think we should pause on the word anonymous real quickly, especially when it comes to Bitcoin. Because that's, in case anyone didn't hear it, and Caleb kind of talked about it, the remarks that Jerome Powell gave was that the CBDCs need to be non-invasive and keep security in place, but they will not be anonymous. Now, a lot of people are sitting there saying, oh, rah, like, that's what makes it evil right there. Let's pause for a second on cryptocurrency and blockchain technology. Because technically speaking, cryptocurrency is not anonymous. This is something we talked about for a long time. When people accuse people of using Bitcoin and other cryptos to create to commit crimes and to do that, is a terrible idea, because we can track money. In fact, Bitcoin, we really need to get on the same page. Maybe CBDCs will be less anonymous than Bitcoin. I mean, maybe we attach specific names to every single one. But theoretically speaking, using Bitcoin, you're not anonymous. We can track what the moves you make. We understand what you're purchasing, what you're not purchasing. Here is the big difference, though, to me, about the difference between a CBDC and Bitcoin. Both are not anonymous. The difference is there is no singular entity in Bitcoin that is going to punish, take away, or hurt you in any way when you're using cryptocurrency. CBDCs, on the other hand, having a centralized authority, that being the government or the entity. If we have a bank CBDC, that bank that controls you, they have the right to shut down, to take your money, to confiscate, and have control. So I think when people look at this, because I saw a lot of comments underneath the posts about his comment, and they were like, well, Bitcoin's not anonymous either, so why are CBDCs that bad? The difference is centralization versus decentralization. And here's where it's going to get a little more hairy, I think. Now we're going to have to start opening up to other cryptocurrencies, other blockchain technologies that are centralized or decentralized, and evaluating how good or how bad they are. I think the CBDCs actually, the oncoming of CBDCs is going to open up a very healthy conversation for consumers, because they're starting to vocalize fears, but I don't know if everyone's actually thought about what their fears are rather than just hearing them from somebody else. This is when, if you have a concern about anonymity, is that the right way to put that? Anonymity?
It is.
There's a lot of altcoins out there that you should not like whatsoever, but you might be holding at this point. Bitcoin is one of the few with a lot of certainty. There is decentralization there. And there's lots of other cryptos that are the same. But if you are concerned about CBDCs because they are not anonymous, maybe you want to take a look at some of your crypto portfolio and see what else is there. Now, I don't want to poop or trash on any of the value propositions, but for example, there's been a lot of speculation, debate going back and forth about Solana. Solana is a very centralized coin. Could you make some money using it? Absolutely. I don't want to poop on its valuation. I think that a company in Solana, because that's what I'm really going to consider it, I think that they can go very far. And if you own stock in Solana, which is what it's like buying the token, you can make money. But don't fool yourself in thinking you're purchasing a cryptocurrency that's decentralized. Absolutely, Solana could work with other entities and confiscate, monitor, and really have control over you. This is I think the conversation and the education that's going to come out of this. So I actually love that Jerome Powell brought this up and started a conversation I have not seen happen too often in the crypto space.
Tim, can I add one thing to that, which is in addition to the points that you make about decentralization, I think one other important thing to note is that, when we sign up for a centralized exchange or a broker, whether that's through Gemini, Coinbase, or Kraken, right? We need to sign up with our first and last name, our date of birth, our social security number, our address, all of this very personal information, right? But our wallets in and of themselves, right? Like if I send my Bitcoin or my Ethereum onto a cold storage wallet, that cold storage wallet, you're right, it's not anonymous in terms of like it's public. People can look into it. They could see transaction histories, where I'm sending things to, this, that, and the other. But I think the key thing is that, for example, that wallet address is not tied to Caleb Franzen social security number, right? And so with the Federal Reserve having a CBDC, we would be, I guarantee it, essentially forced to create an account with social security numbers, likely connecting bank accounts, checking accounts, saving accounts, everything of the sort. And, in that sense, having quote unquote Big Brother, even though I know the Fed is a private bank and private enterprise, having Big Brother be able to really kind of see into our spending habits, because that's one big, like, for example, there's someone from the Bank of International Settlements. I can't remember what his name is. I think he's a South American individual or Spanish or something of the sort. But anyways, he mentioned how one of the key aspects of a CBDC is this ability to really understand consumer habits and trends, to be able to get these insights and even a sense of control, right? And so that's where I think people get a lot of the red flags about this lack of anonymity, right? Because you're right in pointing out that these decentralized platforms, something like Bitcoin specifically, provides us that anonymity, but in my opinion, the decentralization aspect really taps into the permissionless nature of that monetary network, right? We're not dependent on an individual bank or the Fed to okay our transactions. We're relying on, 200 quintillion calculations of compute power per second to verify and send our transactions. So I think that's a big differentiator as well.
And I think, even carrying on, definitely what you were talking about there with CBDCs, and I want to get T-Stream's take here in just a second, but, yes, it is the boogeyman. It is the worst of the centralizations, because you're literally getting that centralized system, that entity is government officials. My point, though, here, and you start talking about social security numbers, and you're absolutely right. Let's just be real, though. Social security numbers are not exactly as secure as we would like to think they are. For example, my point here, yes, if I had to sign up for a CBDC with my social security number, yeah, I'm just giving it away to them. But if we don't think that government authorities with the current situation have the ability to track our information and just assign that stuff to us and shut us down, then we're kidding ourselves. The reason I'm not that point's not as big to me is that if a government wants to get into my stuff, they're going to be able to do so. We're talking about money and confiscation, and then also what is going to be happening with control there. In Bitcoin, they can track me. They can say, I saw that Tim did X, Y, Z, and that is against our laws, and I could still be arrested. I could still go to prison. But what they could not do is confiscate my money. They could not do that. With my cold wallet, they could hold that cold wallet in their hand. But we've seen this happen, where governments have literally arrested somebody on some sort of crime that they used Bitcoin for, and they are not able to actually get the Bitcoin because they cannot hack it. The difference, though, when you're looking at centralized systems, when you're looking at exchanges, which are centralized, and people sometimes get freaked out about that, exchanges are centralized. Some of these currencies are centralized, meaning there is an entity that can control, that can confiscate. All the government has to do is work with that entity, and they can have control and confiscate your money and use that accordingly. My point here is that, yes, is CBDCs probably the granddaddy of all the evil in blockchain technology? Absolutely, yes. But if people think that it is the only enemy and there are not a few black sheep, wolves in sheep clothing hanging out around us in the cryptocurrency space, we're also kidding ourselves. And I don't think just because you don't have to use your social security number to purchase certain centralized cryptocurrencies, the fact that you are invested in them and there is an entity that controls them, if they were to conspire with the government or with another powerful entity, that is control over you, and that is my concern.
Yeah. So my take really quick, if you go to my screen, Smay, this is coming from the technical evaluation for U.S. Central Bank Digital Currency System as of this year, as of this month, September 2022. One of the sentences that came out that stuck out to me, this is a very long document, by the way. I just skimmed it. The CBDC system should not expand equitable access to the financial system. The CBDC system should expand equitable access to the financial system, and one that I have highlighted here is should not create new inequities. So already you're seeing a bunch of a social layer being imposed and projected onto a currency. And look, maybe the White House is onto something here that is actually beneficial to the global population, or at least the population of the U.S. Maybe there is a place in the future for a CBDC that is even tied to a social credit score. I wouldn't want that, but if I have a very limited perspective. If you play it out, who knows? Maybe that actually works out really well. I doubt it, but the point I'm trying to make here is the White House is already trying to ascribe social realities and social factors and variables into their planning for CBDCs in the future. And who knows, maybe then the administration that actually enacts a CBDC will dispense with everything that previous administrations have conjured up toward that effect. But the point is that Bitcoin, it would take the movement of a mountain. It would take so much in order for any kind of social parameter to be built into Bitcoin. Anybody with access to the internet and access to a device of some kind can get Bitcoin, buy it and sell it, and that's just the long and short of it. And a CBDC is not necessarily it's not at all beholden to that type of extreme liberty, extreme freedom. I think in the future, CBDCs are going to be useful for governments to be able to pay their employees and maybe to pay for military expenses and maybe to buy maybe price contracts for large commodities that they're going to be buying for their government vehicles and things like that. But Bitcoin specifically will be the value that people try to put their money into to perpetuate into the future. It's the way that people will save. Individuals will save and institutions will save. And then Ethereum and all the other altcoins will be kind of the Web3 that everybody's thinking about, is like the internet upgraded, and to where you can't just post a bunch of crap online, because if you post a bunch of untrue things or a bunch of unmerited things or unwarranted things online, there will be a cost to that. And ultimately that will eliminate bots and things like that. So that's kind of the structure of where I see CBDCs being useful in the future. And as of right now, they're already baking things into the CBDCs that may be great, may be good. On paper, it certainly looks good to a lot of people that kind of look at things from one political point of view. But Bitcoin could really never have those type of social layers built on top of it. And that's why I think even if CBDCs do become popular, I think Bitcoin wins out for sure at the end of the day in terms of the biggest market cap for savings and investments into the future.
Well, and I think a good way to even think about it is the concept of these centralized exchanges, centralized coins and centralized use cases in crypto, in Web3. You're going to need those for what T-Shirt was just talking about, interacting socially. Yeah, that is okay. We're talking about monetary value. We're talking about currency and the concept of this is the reason I love this topic and it's coming out, in the crypto world. It's very easy to look at CBDCs, to break down what they are and understand the evil that is paired with them. But what I'm hoping happens is as people start to connect the dots, they realize, oh, I can't just blindly put my monetary value in a cryptocurrency thinking that crypto was all decentralized. No, I need to start paying attention to these cryptos specifically and what they are doing, because there are projects out there right now that people are probably making a lot of money in right now and are thinking this is a very good long-term store of value. But because those coins lean more centralized, it is one that they will learn to say, uh-oh, do I really trust the entity that is controlling this? Unlike Bitcoin, unlike the Cardanos, unlike the DOTs, and these ones that have more decentralization in them, that, as Tishin put it, it would take a mountain to manipulate and to control and to end up confiscating your money. There will need to be a split of what we use blockchain technology for. There are use cases to further developing this world and how we interact in it, and there is monetary value, and it's time that we start doing our research to understand how to put things in certain camps. Doesn't mean you can't invest in a company that's not centralized. That's what the stock market's all about. All those companies are centralized. The issue is you're putting it there because you believe in the future of that entity. You're not just trusting that entity to do everything well with you. And the minute you stop trusting that entity, you take out your investment. I think it's a good topic. We're going to continue to discuss this as we keep going on. But I want to jump into the next one. And this is where I'm super excited to get Caleb's take, because I know this is his area of expertise. And that is when we're looking at U.S. Treasury yields and the Dixie, which, by the way, Smay, go to my screen here really quickly. We are falling at the moment. We've come back down below 114. We're coming back down. We broke out of a symmetrical triangle pattern that could potentially also be looking like a bull pennant, but we're heading back down, leading towards Bitcoin coming back up above 19,400. Maybe is there a relief line coming back? That's a pretty good sized candle on the 4-hourly chart, but all of this could be wiped away if we see Treasury yields and the Dixie begin to get some more power, and that is where Caleb, I believe, shines the brightest. So Caleb, what are your thoughts about what you're seeing on these charts and what you know is happening in the news with this information?
So, I mean, yields in the dollar are moving today because of the Bank of England's announcement and kind of, the actual disorderly bond market dynamics that we're seeing in England specifically. And so what's happening is there's and I did some tweets about this morning to just kind of get my immediate thoughts out into the world. But what's essentially happening is, with all of the chaos happening in UK, which is, one of the most significant economies in the world, and a lot of capital does flow in there. If global investors are now very uncertain about the direction of monetary policy that the Bank of England is going to pursue, and now they're essentially telling us, well, we're going to tighten monetary policy, but we're also going to be buying long-dated UK bonds. That's the equivalent of being on the freeway going 70 miles an hour, having your foot on the gas pedal, but then throttling the brakes at the same time. Not taking your foot off the gas pedal and then pressing the brakes, but simultaneously doing both. And I had a back and forth with someone named Bitcoin Tina on Twitter. And, I was saying, like, we all know that that's not good for the engine of your car, but that doesn't mean that the car is going to blow up right away, right? So in my opinion, the Bank of England is essentially setting themselves up for a slow burn here. Yeah. And global capital investors, this is extremely confusing, even for someone like myself, who's been a student of monetary policy for, the last 8+ years. And so from my perspective, when we have global capital that's looking for a place to find a home, the Bank of England, everyone's scratching their head and saying, excuse my language, but what the fuck is going on? And so when that dynamic happens, and that global capital has the ability to find its way into the US and generate a yield of, on a 2-year treasury, 4.2, 4.3%, money's going to flow into the US and into US treasuries and dollar denominated assets. And that's exactly what we're seeing today. The fact that we're seeing yields plummet so much today is merely a symptom of increased demand for US treasuries and therefore bidding yields lower, right? And so earlier this morning when I did that post, the dollar was actually positive on the day, which reaffirmed my sentiment, because typically we would expect to see yields in the dollar move in the same direction. And so with yields falling and the dollar rising, that's showing me that global capital has high demand for dollars today and dollars in the future, which is essentially treasuries.
So, I didn't know you.
Last thing on this is it makes sense to see why risk assets in general, whether we're talking about Bitcoin, stocks, the NASDAQ, whatever the case is, everything's getting bid today because yields are moving lower and money is flowing into dollar denominated assets.
Yeah, sorry, I didn't mean to interrupt you there. What I was going to say is your analogy, I loved it. Going 70 miles an hour down the freeway, but I might even do it one better. I don't think that that's like slamming on the brakes, which would be horrible for the vehicle, but ultimately I think the vehicle could fly. That's like going 70 miles an hour down the freeway and saying, all right, let's get ready to put our gears into reverse. That is what we're kind of looking at right here. Very interesting. That's good to know. That's crazy what's going on over there.
I have just a quick question though for Caleb though. So the Bank of England's in a tough situation here with all the moving variables. What would you do if you're the chairman of the Bank of England?
I have no idea, because when we think about countries defending their currency, right? Because that's essentially what's happening is the dollar continues to get bid up. That's a reflection of liquidity and demand for international currencies declining, right? And that money is now flowing into the US. And so typically the way to combat that is by increasing the interest rate in those currencies and into those bonds to attract investors back into that currency. The Bank of England has been very clear in at least prior to today and maybe prior to the last week, that they intend to continue to raise rates. They've been very transparent about the direction of monetary policy and that they will continue to essentially tighten. And that's a very stark contrast to what's happening in like right next door, right, with the ECB. And so, I don't know, because this is an extremely weird predicament and kind of highlights this dollar wrecking ball or dollar milkshake theory that, everyone is talking about. Is every country is at a severe disadvantage because they are not the world's reserve currency and they don't have the ability to print into oblivion. And also, as the US is tightening our monetary policy, right? What that does is that actually exports inflation. And so with a strong dollar, that exports inflation. And so all of these countries now are already dealing with significantly high inflation. They're dealing with a significant slowdown in economic activity, and they're forced to tighten rates in order to essentially fight that inflation, which is going to have a severe impact on their economy. But they're having to essentially tighten faster than they would because of the dollar wrecking ball, dollar milkshake theory kind of dynamics, right? And so the Bank of England is doing something that's very head scratching. But the reason why they're forced to do that is because their bond market was actually failing, right? And I did a post about this also this morning, which is, just because the price of something is falling doesn't mean that that market is disorderly or dysfunctional, right? It just means that buyers aren't there at that given price, and sellers are having to adjust lower. A bond market becomes dysfunctional, or any financial market becomes dysfunctional when there's no supply when there's no demand or liquidity at any given price, right? And so that's essentially what has been happening in British bonds for the last week or two, right? And they've been severely repriced lower. Go ahead, sorry.
No, that's really, really good. Couple this with what Data Dash was saying the other day, and you're starting to paint a portrait where you might be misinterpreting this as, oh, this is going to be good for the United States dollar. And even though I'm in crypto, I do have a lot of United States dollars. Guys, the fact is, if the United States, if you run this out to its logical conclusion, and the British pound sterling and the EU and the Japanese currencies, if all that starts to just pile into the United States dollar, that dollar gets better. It's more highly valued, costs more. But when you're exporting something from, say, Japan or the Netherlands, right? It totally messes up trade. It makes it to where exporters and importers, the balance of trade gets messed up so much to where you basically have to close up shop, because
what it is, so the best way to put about it is, even though these countries have their own currencies, they owe debt in U.S. dollars. And the more valuable the U.S. dollar gets and the less the value their dollar gets, they can't pay off the debt. So like what Tisha said, let's imagine a business that cannot pay off anymore. They've been in the red for some months. They just shut down. Well, guess what? What happens if these countries in Europe and what happens if these countries in Asia start shutting down and they're not doing anything? We've made ourselves dependent upon outsourcing work to other, we have to get so many goods in from other countries, namely China, Japan, these countries in Europe. If they shut down and can't supply us anymore, our currency is valued by a lot. We don't have anything. And the average person cannot go down to the store and purchase the things they need to keep living because we have outsourced all of our production to other countries. This is why you see some American economists demanding and talking about the need to protect ourselves in the future of getting production back stateside so that we're not so dependent on these other countries. But at the moment we are. And so T-Shroom, you're 100% right. And that's what Data Dash was getting at, is that if your thought is, oh, well, we're America, so the fact that the US dollar is more valuable than any other currency, good for us. No. We have a global economy, and if there's too big of an imbalance happening there, we screw everybody over, and then that in turn makes us get screwed over. All the more reason why Bitcoin and cryptocurrency needs to be the future. But yeah.
Yeah. Any more thoughts on that, Caleb?
I like Tim's last point. If we're no longer the manufacturing hub of the world, which has been the case for decades, and we wreck the economies of the actual manufacturing countries, that is going to severely impact us because we still have, we're the consumption nation of the world, right? And so if all of a sudden goods are no longer being produced internationally, we're going to suffer in terms of our consumption.
Mm-hmm. Yeah.
And so that is kind of the dollar wrecking ball. Like it's in the name of, that kind of theory, is that this wrecking ball dynamic of a strong dollar is very impactful.
Yeah.
And from an economic standpoint and from a financial market standpoint, right? So, it is really important. I'd like to really quickly share some analysis with you guys on the Dixie. I'd love to share my chart on this. Let me just go ahead and share my screen.
Go for it.
So one thing that I really like to look at is something called a Keltner channel. And without getting too statistical, it basically calculates the average true range of a price over a certain period of time. And then it doesn't create like a standard deviation, but you create these bands, right? And so this is, kind of a useful way of identifying a trend and identifying overbought and oversold levels for any given asset or security. Mm-hmm. And so here we're looking at the US dollar index, the Dixie, daily candles. And what we can see here is, generally speaking, the Dixie really started trending upwards back here, right? In 2021, we really started to make higher lows and then continue to follow through and make higher highs and kind of creating this exponential ascension, if you will. And the thing that I'd like to point out is that, we have in the past gotten to these sections where where Dixie breaks above the upper bound. It kind of happened here, certainly happened back here, happened here, and now it's happening again right now. And one thing that I've noticed, and I noticed this prior to just analyzing the Dixie, but when we get those kind of breakouts and then we re-enter the channel of the Keltner channel, we almost always come back to this white center line, which is the actual average true range calculation. Mm-hmm. And so with where we are right now, we're just piercing back below into the upper bound of the Keltner channel. And based on the average true range right now, we're right around, basically, let's call it 111.5 versus, 113.80 right now. And so that, essentially gives us almost a 2% downside here for the dollar, which I think is normal. Again, when you're in a trending market with any trend, right, we create higher highs and higher lows. We go through a breakout, a consolidation, and then a new extension, rinse and repeat. And so, things don't just continue to rise linearly. The market needs to digest gains or losses and then continue in the direction of the trend. I remember talking with you guys about that back in early September when the Dixie was around 110, 111. And I said, I wouldn't be surprised if Dixie gets back into that 107 range. Sure enough, we did. And now we've kind of had this massive big extension once again, right? And so the dollar and yields are clearly overheated right now. And I think the BOE's announcement is going to fuel, like I said, short-term demand for U.S. treasuries and dollar-denominated assets, which could cause the dollar to cool down and therefore, kind of allow the market to take a breath here. And so I wouldn't be surprised. Like I said, I want to, give your guys' audience some actual alpha here and say, I wouldn't be surprised if we see a cool down into that 111 range. So be prepared here for a little bit of a relief rally is what I would generally say.
The other thing I would say, go to my screen here real quick, Smay. It's loading. Yeah, there we go. That's funny you're talking about that because we're also corresponding with this longer time frame. I'll go out to the weekly chart just for this. We've been talking about that megaphone pattern now for a while. There's lots of different ways to do that, look at the charts, but we're hitting our heads right there at that red line once again. And it's in a decision point because not only are we hitting our heads in the red line, but we also set this bull pennant. The question is which one's going to perform. It's calling for up to 119, which should go back to peaks we had back in 2002. But I think that's really interesting. This is something that let's see, who was on Michael Van de Pope yesterday was talking about this.
Yeah,
he said literally, I want to remind you guys his prediction. He said we might still be pumping for the next day or so before the dip, but he thought the dip was coming in Dixie. And at this point, it is potentially looking like, even what Caleb's saying, that Michael might have been just about perfectly right, in which case this kind of moves us into the Bitcoin concept of like, all right, can Bitcoin get back up? We came back down again to this zone of support, and now we're rallying right now, sitting right below 19,400. Are we going to go ahead and match back up to that wick, which is a really, in hindsight, looking at the daily chart, the fact that we've just been hovering down here, had a wick shoot up above 20,000, and we came right back down. Is that an indication of that was a good price point, and we're going back to those levels and maybe outdoing them here again very soon?
It kind of makes me think with how strongly we're staying above that orange box that you have highlighted. It kind of makes me think that there's a business out there to the tune of like a MicroStrategies or even a Binance that knows that it will get insolvent if Bitcoin goes to 15,000. And so we keep having these big pumps that then when the market goes down on new economic data, it goes down, but it doesn't go lower from where we were before that pump. That's just kind of what's coming to my mind. But so we could get into the natural gas.
I want to let the audience know, we're going to go ahead and just run along today because I really want to ask Caleb this last question, and then we'll still be doing some chat because I saw some super chats there and update you guys on what's happening. So the last question I have for you, Caleb, and what we were talking about right there kind of correlates right into this. Our question we had was, how will inflation be affected in Q4 with potential prices of oil and stagnant housing prices raising? I think another question we could add into there is, how will inflation be affected by what we just discussed with the crashing of these other world currencies? Will there be some pressure potentially on the Fed to say, you know what, we need to soften up because this isn't even just about the U.S. economy short term. If we get too strict and these other countries start flipping and they start allowing the U.S. dollar to be more powerful, shutting down the global economy, that would be no good. What they'd have to do is raise prices on every single good, not just housing and oil. But will Jerome Powell and the Fed potentially even have that factor to consider when looking at what they're doing to fix inflation?
So they'll definitely need to consider those things. I don't see, and I did a post about this on Twitter this morning too, because I think this is going through a lot of people's minds, is that with the Bank of England essentially being the first central bank to, kind of capitulate in some form or another from their tightening cycle, is this kind of alluding to or foreshadowing what the Fed may eventually do in the next couple of months, right? And so, I'm not necessarily quite convinced of that just yet, but I certainly think that this gives the Fed perhaps a little bit more reason for caution in terms of tightening as aggressively as they have if a bank like the Bank of England is loosening. The thing is, the BOE is merely one central bank. They're a major player, but the Bank of Japan has been doing yield curve control, throughout the Fed's entire tightening cycle that we've had in 2022, and that hasn't necessarily stopped them from continuing to get more hawkish, right? And so I just want to remind, the Fed is aware of what's happening internationally, but their first and primary concern is defeating inflation here domestically. And one of the things that we talked about is if I'm thinking about this now is, if the Fed is, if a strong dollar essentially exports inflation, right, that means that there's less of it here in the States. And so, the Fed might actually look at this and say, hey, in terms of actually achieving our goals, we could continue to stay tight in this environment as other central banks maybe shift or capitulate, which we haven't seen much evidence of, right? Like I said, the Bank of England is the only one to do that so far. So it'll be interesting to see how that unfolds. I think the one thing that you did mention is trying to tie back into commodities. So I'd love to go there if you have a specific question.
Yeah. Okay. Oh, sorry. That's my cue. So, I'll actually preface this. So, Smay, if you'll go to my screen really quick. So, I've got this ties back into the Nord Stream pipeline, right? So, this is the Dutch. This is the Dutch natural gas prices. This is, for better or for worse, this is kind of the European price of oil, of natural gas. This is going back to mid-May of 2020. And you'll see that the price from the trough to the peak here is 90,000% higher. So,
Wow.
and then if you look at the U.S. prices, and I'm drawing this out because it's hard to compare because the prices are different and they're priced differently because there's a different different system of measurement. But the price differential is significant. So if you look at the U.S. natural gas price difference, it's 300% higher. So both have experienced, pretty staggering natural gas price increases, but obviously the Dutch oil prices have gone insane, up almost close to 9,000. So the question is how could not just the natural gas prices, but also oil prices and also housing, how could that potentially mess up inflation toward the future? And I think that we kind of got to this question a little bit in the last answer, but so if I could put it like this, what do you see being more likely? Housing prices stagnating and keeping inflation high, or oil prices coming back up? Which do you think is a more has more potential to disrupt inflation going forward and make Jerome Powell have to be more hawkish?
Well, if home prices stagnate, and I don't think they're going to stagnate, I think they're going to fall quite rapidly. In that scenario, that would bring in that's a benefit to the Fed.
Okay.
That would cause inflation dynamics to be in their favor, essentially returning back to trend. You highlight the probably one of the most significant risks to the Fed's success right now, which is the energies and commodity prices, right? Yeah. And so I'd love to share this chart because I think this is really important for people to know. I almost clicked leave on my screen.
I
didn't. That wouldn't have been good.
I want to show you this one thing. Goodbye.
Yeah, exactly. Yeah. Dip. What we're looking at here in red is 5-year break-even inflation rates. And in teal, we're looking at crude oil prices. Mm-hmm. And this is a really impactful chart because, for one, it shows somewhat of a flaw in U.S. consumer psychology, which is that a lot of our inflation expectations are really influenced. I don't even want to say really, they're severely influenced by the price that we're paying at the pump, which is obviously a factor or a derivative of the price of crude oil. And so when we look at this amazing correlation here, obviously we're going to have some deviations, right? Like we almost got back to the highs back here in June from March. But what we can see is that 5-year break-even expectations were just continuing to fall during that environment, right? You might be able to point to this level here and say, oh, it rose there, right? But generally speaking, we've been in a downtrend now since, late Q1 of this year. And so, I've spoken about this in the past. I'll stop sharing my screen now, but this is one of the big benefits that the Fed has right now in their fight against inflation is that inflation expectations in both consumer and business psychology are not unhinged, right? They're not running rampant, and inflation isn't becoming baked into consumer psychology. Correct. Even though it's certainly, I don't want to say it's a top of mind concern for U.S. voters and the U.S. consumer, right? Yeah. Clearly so. But still, as of right now, the market is expecting inflation over the next 5 or 10 years to be very muted or generally in line with some kind of sense of a historic norm, right? And so right now it's trading at 2.35%. And, the Fed has said that they want to target a level of inflation at or slightly above 2%. And so here we are. So the Fed is looking at this and saying, thank God. And also, thank God crude oil prices have continued to fall because this is really helping us in generally keeping inflation expectations relatively low. Yeah. And so this is a big benefit for them right now because as soon as inflation really does become embedded or entrenched, as the Fed might say, in consumer psychology, that's where things will really get haywire and we get this kind of recursive effect of consumer psychology fueling more inflation and inflation, all this nonsense. So that's first and foremost. I want to touch on housing really quickly because this is something that I've been really keenly focused on for probably like the last month and a half, or at least the last month. But what we've seen in 30-year mortgage rates is really, truly phenomenal because what's happened is on a year-over-year basis, the U.S. has never seen a period where the 30-year average fixed mortgage rate has doubled over the course of a 12-month period. We've not only surpassed that doubling right now, but we've done it in essentially less than a year. Mm-hmm. And what's happening is that there's essentially no signs of slowing down. And I think we're above 115% or 120% on a year-over-year basis in mortgage rates. And so what's happening now is demand is going to get very, very slim, right? For example, my mom is looking to buy a house in Santa Barbara. Home prices haven't fallen that significantly relative to their last sell price, right?
Right.
They've certainly been marked down, but my mom is looking at these homes and she, no one can afford these homes at a 7% mortgage rate on a 30-year basis, right? And so demand has already been falling considerably. If you look at refinance applications, which I think are generally considered to be somewhat of a leading indicator for demand of actual homes, these are plummeting. They're at near record lows, essentially. And this is also going to have a severe impact on supply, because someone who bought a house at the beginning of 2020, let's say January 2020, I did a study on this and I looked at the Phoenix home market, for example. The average home price in Phoenix in January of 2020 was like $275,000. Today it's $430,000. But mortgage rates over that time have essentially increased from 3% to 7%. So someone who now owns a home and they've ridden this crazy market over the last 2.5 years, and now they bought a house at 275 and now they're sitting on it's worth 430, and they want to upscale. Maybe they're looking to move even out of Phoenix, whatever the case is, but they're trying to buy something at the $500,000 range. The cost of their mortgage now has more than doubled if they go into this new house at $500,000. And that is going from a $430,000 house to a $500,000 house. So a $70,000 difference. You've now more than doubled the cost of your monthly mortgage. And so this is going to create a very severe dynamic where supply is going to be suppressed even more, and it's going to have a simultaneous impact on demand. And so I don't think that there's any way right now that the US housing market can come out of this unscathed. We just had the Case, I'm sorry, I'm going on a major rant about this, guys. I'm sorry, but the Case-Shiller National Home Price Index was updated. I think it was for the month of July, if I remember correct. So it's very lagging, unfortunately. But for I think it was the first month that we've had in a very, very long time where home prices declined on a month-over-month basis. Even still, they're up almost 16% year over year. So like when we think about a home price correction, we're not even we're in the first inning right now of where this could potentially go.
Right.
Wow.
Yeah. It's going to be important.
There's so much good stuff here. We are going to probably go ahead and move on and go. Do you have anything else you wanted to say or ask, T-Shirt, before I
actually
go? We could be here for probably 5 hours.
So we've got
let's do it.
Got the GDP print tomorrow, and then we've got a couple more some more data coming out. I believe the Euro, the Bank of Europe, the ECB does their interest rate announcement on or get their inflation. Let's just do GDP. GDP print is coming out tomorrow. How do you think that's going to affect the DXY? Do you think that could be the kind of the fundamental catalyst for the DXY correction?
That's interesting, and I haven't thought about this yet. I mean, clearly it's a threat, right? And so I'm trying to think, because the data that I'm immediately going to is the Atlanta Fed's GDP Now tracker. And I know it was like at the beginning of September, it was like forecasting, I think it was like 1.6 or even above 2% growth, real GDP growth for Q3. That's now been revised to like 0.3%. So it's been significantly decreased in terms of the Fed's expectations, and essentially, they'll continue to revise that number for probably the next month.
Yeah.
And so as we kind of get closer to their final revision, we essentially get more and more accurate data. And so, that's certainly going to be a threat. I think generally speaking, I don't know what the median expectations are for the GDP print tomorrow for real GDP growth. But generally speaking, the market isn't anticipating a strong number, right?
Yeah. It's
no one's necessarily anticipating strength. And so when we think about, assets across the board are priced based on market expectations for the future. And so if the market isn't necessarily expecting anything great, and they're just expecting a continuation of anemic growth, whether that's, plus or minus, let's call it 0.2%. If we're in that range, I don't expect things to really have fireworks. Yeah. The Fed has made it very clear that, they're trying to muck up demand. They're trying to decrease demand. And, we've seen that now for 2 consecutive quarters. And I think the issue that the Fed is looking at is that gross domestic income growth has still been very strong. And we have this severe dislocation between GDI and GDP, where GDP is continuing to decline, but GDI continues to increase. And so not only is the Fed wanting to see GDP decrease, they also are going to want to see GDI decrease, which is going to be a function of the labor market, essentially.
Yeah, the forecast for tomorrow is going to be negative 0.6 GDP.
Oh, it's negative.
Wow.
Yeah. And the previous print was negative 1.6. So
what a swing.
Yeah, so it'll be interesting to see. And then on Friday we get the core PCE for the US and also the GDP growth rate for
what month? For August?
Yeah,
for the PCE?
Yeah.
Yes. August.
It's still coming out in September.
So it's a pretty big inflation print that's kind of sneaking in tomorrow. We also get the Michigan Consumer Sentiment Final tomorrow as well at 10.
That'll be key. That'll be key.
That's going to be a really big one. So
I
think that we've exhausted, my mind at least is exhausted, probably exhausted our audience as well, taking in so much data. But Caleb, it's been really, really good.
That's what Caleb Franzen Wednesdays are all about.
Yeah.
We're going deep into the weeds.
Hey, I come in with fireworks, guys. I'm always ready to rock and roll when I come on your guys' show. It's always a blast.
Oxide, for sure.
Oh, man. Caleb, thank you so much again, dude. It's always awesome having you on the show. We'll see you again next week.
Talk soon, guys. Peace.
Right. Bye. Great stuff there. Again, we went long, but I was like, man, we got to get into all this stuff because it is a lot of information. It's a lot to get through, but we're going to be glad. Once we take all this stuff into consideration, we're going to be very glad we did so we can continue to inform our decisions moving forward. Whew. We got some super chats, though. Do we not, Smay?
Yes.
Smay, you've been quiet over there for a little bit. How are you feeling?
Well, I was letting you guys get to the fireworks, I was thrilled. I was enthused. I love hearing about this stuff. It is my favorite topic.
Smay, what do you think about Caleb Franzen?
I really like that Caleb Franzen guy. He's a really nice guy. I look at him and I think, wow, if any of the analysts in the crypto space that I'd want to be like, I think I want to be like Caleb Franzen. So shout out to Caleb. But anyways, I'd like to read some super chats here. We have Eric Wallen donated, said, how is it possible that a worldwide asset such as crypto respect TA levels so exactly, price always bouncing off the same levels?
Yeah, I mean, that just has to do with what technical analysis is. Technical analysis is just looking at the history of formations, knowing that other traders are responding, and so it's the concept of saying, hey, I'm going to try my very best to use the psychology of other traders to try to make the same moves they do. And so here's what people need to know about technical analysis, though, is that technical analysis is good on ones that have I can't remember what the number is, but it's like you have to have a certain amount of volume. So if people try to do technical analysis on these little itty bitty altcoins or brand new stock option stuff, it doesn't work as well.
Well,
but on something like Bitcoin.
Well, so I was gonna say there's actually like a psychological thing to that. How they talk about if you have the smaller the group is, or if it's one person is completely unpredictable. But when you get a group of people, it's extremely predictable, right? So it's the same thing. So
the more volume going on, the easier it is to read the technical analysis.
So basically that's what's so cool about technical analysis is that human beings are so predictable when in a group. Yes. When you have one human being, it's very hard to predict, right? So when you have a small group, it's very hard to predict what's going to happen to the price. But when you have a large group of people trading on one project, it's very easy to predict.
What about the size of the one person? If it's like a really small person,
your camera's going crazy right now.
Is it easier to predict?
Your camera's going crazy.
Because the camera's mind is being blown by
dude, it doesn't want to focus on you.
Yeah, not good.
It's funny. Actually, the other day on the Ruck, T-shirt and I talked about this. We had this exact conversation.
How to predict the size of a person.
Exactly. How to predict the size of a person in the trader and how that. No, that's not what we're talking about. We were talking about the concept. Traders are always shorting and long. Good traders are always shorting and longing. Not saying at the same time, but I'm saying there's always right now. There are experienced traders shorting Bitcoin, and there are experienced traders longing Bitcoin. Yep. What they're watching for is the psychology of how they think others are using. So they're looking at other volume, how it's moving. They're looking at formations. They're looking at key levels that are being respected, and significant amounts of entry points have been put there. So literally, technical analysis is the art of reading the psychology of everybody else out there. And as May put it, the more people you have, the more predictable it would be. Great question in chat. So anyone who wants to learn more about technical analysis, you came to the right place because we have.
Yeah.
I'm gonna go ahead and say it. I've never seen one better. We have the best technical analysis education out there, and that is Club DeFi.
And
so.
I really like that super chat question because so often we take so much of our knowledge for granted. We forget about those questions like why is Bitcoin trading above 18.3 and why and there's so many answers for that, but the question they're asking is why doesn't it go below that? Like what like they're trying to understand that. Ultimately, the answer is trading psychology. You know, you could also speculate that there's manipulation. There's big players that don't want it to go lower. But it's an excellent question. Getting back to the fundamentals.
It is an excellent question.
I think I saw another one.
We do have
right?
another
Okay,
one.
sweet.
Yeah. I was just going to let you guys, get it out. Get it.
It was a good question.
Yeah. So anyways, psychology, guys. So when you get a lot of people, no, I'm kidding. All right. So the next one here we have from T-Dub says, Chainlink staking announced at SmartCon. Starts Monday.
It was from who?
T-Dub.
T-Dub.
Oh, Big T-Dub, yeah.
I know you're a fan.
T-Shroom.
I know. Oh gosh.
Is that your nickname? Why is your nickname not T-Dub?
T-Dub? Because I never win.
No, I'm not talking about you. I'm talking about
Listen,
Tim.
we did discuss the fact that maybe I should go by TD Warren, which makes it sound like I'm a financial
TD
advisor.
Yeah,
Warren.
that's good.
Okay, but
Although I'm
really
not a
good.
financial advisor, so do not take anything I
here's
say
the-
as financial advice.
We have
but
TD
TD Warren
Warren
would be an interesting name.
TD Warren, C.S. Maynard, like C.S. Lewis. You know
Yeah.
what I mean? So then T-Shroom would be, what's your initials?
T.S. Shrum.
T.S. Shrum.
It doesn't have a great ring.
T.S. Shroom.
I like-
the right way.
What was yours, Warren?
TD Warren.
Yeah, TD Warren.
That's
I like
good.
that one.
That's
I-
good. That
it
sounds
is
like
good.
because you got TD Bank, which has
TD
already
Shakes,
got
yeah.
a good
Well,
brand.
I think C.S. Maynard is definitely a good one because it's C.S. Lewis.
Yeah, you know.
All right.
We got one that just came in from Matt C. Do you want to read it?
Yeah, I would love. I would love that.
Yeah.
All right.
We're way over time.
It's
Thanks
fine.
for sticking with us,
Hold
guys.
on, T-Shroom.
We love
Whose
our
fault
peeps.
is that?
Caleb Franzen.
No, it's
It
yours.
is
yours.
Caleb Franzen's fault.
It's your fault, T-Shroom. Anyways, keeping all of our good friends in Florida in our thoughts for the next 24 to 36 hours. Please be safe and don't take things lightly.
Yes.
It's true. No, so anyone who's wondering about the storm here, Gainesville, hurricanes are unpredictable. You never know what they're going to do. At this point, I'm not expecting Gainesville to be hit too severely. It is looking at this point, at one point they were looking at Tampa for landfall for Hurricane Ian. It's moving south. So at one point, the storm's moving west and going to go hit further north. And that's when it was a little bit confusing for us. And it's like, hey, well, how serious is it going to be? It looks like it's going to be making landfall further south, maybe even south of Naples, in which case, by the time it gets to us, it will have been weakened a good amount. But I do have family down in Tampa, so keep them in your prayers. I know my brother is up in Georgia, so he evacuated. He lives closer to the coast. My parents are staying in their home. It's a good home, so I think they'll be fine too. All the trees are gone, so nothing's going to fall on it. But, pray for my family who's down there in Tampa. Pray for anyone's family. I know I saw in chat, Shannon Sharp was saying she had family down there in Tampa as well. So our thoughts and prayers are with everybody in Florida. Again, and not saying Gainesville's out of the woods and we're going to be safe, but, I do think for anyone who's concerned about us, the only reason we're going to have any problems, I think, is going to be power issues. I don't expect heavy flooding here or anything crazy happening.
Power issues, and definitely you got to be careful with trees. When Irma came and hit, there was a lot of fallen trees in my neighborhood. Literally, actually, somebody's house, like the front of their house went. A tree fell on it.
And now that I have to hitchhike everywhere, it's going to be really tough.
No one's going to be out on the road. How am I going to get to work?
Yeah. Speaking of a long show, though, as we kind of transition now from chat into some announcements, just making sure everyone's aware. Speaking of long shows, starting on Monday, we've been thinking about this for a little bit. We've sought counsel of community members. We've sought counsel of business people. We've looked at data. We've done a lot of stuff.
A lot of stuff.
Cosmologists.
We want to be. There was something that was put in chat here just a second ago, and it was by our favorite brewer and baker, Eric Brubaker.
Eric Brubaker?
Eric Brubaker. He said, of the crypto shows I listen to, this one is the most well-rounded, takes into account TA, historical analysis, world macro situations, fiat government considerations, etc. It is truly the best show. I'm so humbled that we get those things, but just so you guys know, that is what we're shooting for. We want to be the most well-rounded show.
Yeah.
And that's why we're bringing on expert guests every single day to give you not only different opinions, but great opinions because they have histories of success. We still want to show you guys what we're doing. We want to cover the news. We want to talk about the technical analysis, but we want it to be well-rounded. And because of that, I don't know if you guys noticed, it's sometimes hard to fit all of that into just an hour. So that's why we were constantly running to 110, 115. we have decided we're going to be opening up the show to an hour and a half with the purpose of this is what every show is going to look like so you guys can be prepared. The first half hour will be the three of us. You know, we'll introduce the show. We'll do our market pulse. We will do some technical analysis, just get you guys ready, what's happening on the charts. Whatever the biggest stuff is, we're going to talk about that. The second half hour, so from 10 to 10:30, it's us three, market pulse and technical analysis. 10:30 to 11 will be a guest, the expert bringing on. So that's the Caleb Franzen Wednesdays. Just as you know, Harry's going to start being consistent on Fridays. We love Harry, Crypto Vet. I think he's in chat. Love him. He's going to be a normal on Friday. We're going to have other technical analysts. We're going to have other sentimental analysts coming on the show every single day to let you guys know what is going on. And if you don't agree with them, at least you get to hear a different opinion. And it's okay if they run a little past 11, but the goal is to get them in for a half hour. We'll have guests. And then from 11 to 11:30, that's when we'll do our chat engagement. We'll update you guys on what is happening, but we will also be doing a lot more interactions and games happening. So not just like HODL trophies and things. Smay is working on some phenomenal community games and interactions for you guys so that we continue to be the most well-rounded and most exciting, entertaining crypto show out there. That is our goal, and it would not be possible without all of you guys. So thank you so much for your continued support. Continue, right now we got, 600 people watching, just under 300 likes. Let's smash those likes. If you're new here, subscribe for more content just like this. As we close it out, let me remind you guys some of the announcements. I said some of these earlier, but I just want to remind you guys, we will not be having a show tomorrow due to Hurricane Ian. It should be hitting us about the time of the show, so I'm not going to put any of us in harm's way and get us to come in here. We're also probably expecting power at least to flicker from time to time, in which case you don't want to be live on a YouTube show, and that'll just be frustrating. What we might do, if we still have power though, we might do like a Zoom call from our home and do a live afternoon, just updating you guys on how we're doing. Also, anything that might have popped up on the charts, because I know a lot of numbers are coming out, so T-Shroom could give some updates there. Friday's show will depend on what happens tomorrow on Thursday, so we're hoping still to have a show on Friday, but if we don't show up, it is because of Hurricane Ian. It's not because we don't love you guys and we just wanted to, skip. Members, big announcement for all of our YouTube members and Club DeFi members. There's a video out right now. If you go to the membership page on YouTube, and I think what we're going to do is we're going to put it in the Discord for our Club DeFi members. If you guys want to know how I'm preparing for Bitcoin potentially crashing as low as $9,000, I laid out a video where I show you guys how I'm laddering in and using the rest of my dry powder. No matter what the bottom is, whether it's in already or whether we set a new one, I'm laying out the plan that I have because I'm prepared for any scenario. And the last one is you don't want to miss this Saturday at 10 a.m. special video where we interview college students about their thoughts on Jerome Powell, about monetary policy and Bitcoin.
This is
Make
a big
sure
one.
you watch it. There's going to be a lot more content.
I didn't mean to push the laugh track.
All the other announcements, so. This one, really
That's the
big.
biggest one. We are super. It was a super fun. It was really fun shooting it. I can't wait to see what the final edit looks like. Definitely not high. Zach is killing it with all of his edits.
Yeah.
And he's definitely
that new intro you guys saw. If you guys think that new intro is cool, he's putting like 1,000 times more effort into this Saturday video, and it's going to come out a normal thing like almost every other week. We're going to have videos like that, getting some pulse of what is happening around Gainesville and potentially traveling some other cities.
Ooh.
Keep that in the back of your mind, guys. That is all we have for you in this show. We love you guys. Stay tuned if you guys missed any parts of the show and you want to see the clips. They will be coming out this afternoon. There will be no videos tomorrow. If there is a surprise afternoon, we'll let you guys know via social media. Love every single last one of you, and we will see you in the next video. Peace.
Oh, I got a real good feeling.